All right, what's up, traders? Another one here from the Dark Side family, and I hope this video finds you a profit. In this video, I want to talk to you guys a bit about risk to reward ratio and how to actually make it work for you. One thing that I've noticed when the market's in these consolidation phases is that people have difficulty staying out, and I think that's actually one of the bigger issues in forex trading, with people who have poor win rates. I think it's just their exposure is just a little bit too high. So what I want to try to explain is it's kind of a way for you to still be able to continue to trade what I think is too much. Allow you to continue to do that, which could kind of be beneficial to you because I guess the more screen time you put in and the more mistakes you make are the better off for you because they say make a million mistakes, just don't keep making the same mistakes. So I guess that constant exposure might be beneficial to you in the long run because you'll realize that that's not the way to do it. But yeah, that's what I want to discuss in this video and kind of how to make a poor win rate still let you come out profitable in the end. Because a lot of people right now are giving their money away to prop firms, and you don't have to be doing that. If you could just get away from the small stop losses, you can still make a decent return. And if you're trading a large enough account, remember, 5% of 100,000 still $5,000. Not bad at all, right? So to get more into that, let's just talk about R to R. What I'm referring to is risk to reward ratio, commonly illustrated like this. And what we're talking about is how much you're risking to how much you're going to make back. So just to simplify the numbers, we're talking about a 1% risk, right? So let's just say you're risking 1% and your goal is to make back 2%. Right now, a lot of people think this is not good. 1 to 2, because social media has created this idea that you should be making 1 to 20s. And I'm going to tell you right now, guys, they're not doing that. Okay, forget about that. And if they are doing that, that's good for them. Forget about that. That's not you. You need to run your own race. You need to stop losing money. You need to start making money. So forget about the 1 to 20 bullshit course seller, Lamborghini, Rolex stuff. Okay, just focus on 1 to 2 because 2% can make you money. All right. Now let's talk about win rate now. All right. Now what's your win rate? Your win rate is how often the trades that you actually take play out in your favor and they go right. Okay. So the realization is a lot of you guys have a very, very low win rate. In other words, out of, let's see, let's just mark out 10, right? 2, 3, 4, 5, 6, 7, 8, 9, 10, right? So let's just say out of 10 trades, okay? Let's say your win rate is only 40%, okay? Let's say it's only 40%, which is not really good at all. I mean, you should aim for much higher, obviously. You can never be perfect. You'll get weeks, and months where you can have a 100% win rate once you get more patient, once you understand how to avoid FOMO, how to avoid market manipulation, how to wait for your phase of the market to be present in order for you to actually execute at a much higher possibility of making a win every time you enter. But again, I'm talking more towards the people that I think that just don't have that market maturity yet, and that comes with time. It took me a while to get like that because, as you know, the market's always showing you an opportunity, and your market IQ actually works against you. In other words, the more concepts when you know retail, smart money, supply and demand, Wyckoff, when you know all these things, it's very easy for you to just look at the charts and find something that you want to do. Find something. We can look real quick and say, okay, well, that's a BOS right here. That's an order block right here. I'm going to sell right here. This is the banker block where I'm going to actually enter another sell, and I'm going to short because you understand the market that way. If you trade trend lines, you can say, okay, well, here's a descending trend line. There's my 1 touch, 2 touch, 3 touch. Now I'm going to sell the market. There's another reason to sell, right? If you trade in another form, you could find buys here as well. You can look at it this way. And you can say descending structure, lower low, lower high, lower low, right? BOS into the zone right here. These are all my buys. Now I'm buying into the market. So now I'm long. Price comes back down. I'm going to buy again from right here and continue the upside. So that's why there's, knowing too many things, your market IQ being too high is actually dangerous because I can look at this right now and come up with 5 different trades, long and short, just based off common strategies that I know people use, and that's without, we can go into support and resistance right here. We can go into Fibonacci. We can go into Elliott wave. We can go into all those things. That's why you got to be careful, right? So again, when you're able to maintain that level of, I guess, composure is a good word, where it's not your conditions. You're not going to use your market IQ to force a trade because you're just bored and feel like trading. Once you're able to eliminate all of that and you're able to stick to your one strategy, even if that win rate on that one strategy, it doesn't matter if you trade 61.8s, it doesn't matter if you trade smart money concept fucking order blocks, it doesn't matter. It doesn't matter what you trade. When you're able to stick to your plan and execute only certain risk to reward parameters, even with a poor win rate, you can still win. Okay, now think about it. 1 to 2. Every time you win a trade, you make 2%, right? Your win rate's only 40%. So you're only winning 4 out of these 10 times right here, okay? So you're going to win right here, from right here to right here. So let's say you hit you hit 4 trades in a row. Things are going well, right? What is that? Times 2, 4 times 2, you make 8%, right? So there's 8% in the bank. Not bad. Remember, you're trading your $100,000 account. Okay, so you just put $8,000 in the bank. Not bad at all, right? So you just made $8,000. Let's just mark this up. My computer's lagging a bit, man. Sorry about that, guys. I live in a tropical environment, and the weather here sucks right now. So you made $8,000. So that's good stuff, right? Now your next 6 trades in a row, and I know this happens to everybody. Used to happen to me. When the conditions change in the market, there's something about market phases, guys. I'm not going to talk about it now. But the market's not always in a giving phase. A lot of times it's in a taking phase, right? So when you get into one of those phases where you lose your next 1, 2, 3, 4, 5, 6 trades in a row, remember you're betting 1% per trade, right? So you just lost 6 in a row, so you just lost 6%, right? So it's simple maths here, boys. 8%, 6%, right? So you just lost what? $6,000. 1, 2, 3. Right now, look, this video isn't for everybody. If you're already aware of this stuff, then good for you. I hope you're actually following these rules and making money using it. But a lot of people that are aware of this, they still don't stick to the script, you know. But for those of you who don't, this is probably going to be a really good eye opener for you, and I hope you get some value, right? So like I said, you just made $8,000, so you're up 8,000 here. You're down 6,000 because you lost 6 in a row. Now you're thinking your strategy doesn't work, you hate trading, what's going on? Guys, if you just stick with what you're doing and continue to only trade 1 to 2s, in other words, you only trade setups that are giving you 1 to 2s, right? See the risk reward right here, ratio 1-3. If you're only trading setups that give you 1 to 2s, okay, like this here, you can still be profitable. You can still do it with stop losses this big. All right, so you can still do this 1 to 2. That's what that means, right? So even with this, you're still making, think about the difference in the money, guys. 8,000 minus 6,000, you're still making a net of $2,000 profit. That's not bad at all. It really isn't. For somebody who doesn't make money trading and they're dying to start making some money and stuff like that, and you have a poor win rate, what you're doing is you're still refining your strategy. You know, you're still trying to make it work for you. That's not bad. And that's only with a 40% win rate. 1 to 2. Guys, it's very, very possible to do this. 1 to 2. That's it. You know, and if you win just 4 out of the 10, you make $2,000 profit. You can take all those losses and still be up $2,000. That's really not that bad. Now, let's say you do that 1 week, right? So 1 week, you take 10 trades, 1 to 2 only. Okay, you only use 1 to 2s, and you made your $8,000. You lost 6,000, 2,000. Now, if you do that times 4, right? 4 weeks in a month. At the end of the month, on a 100K, funded account, you just made $8,000. Not bad at all, right? Not bad at all. And in that month, you would have took what? 4, 8, 12, 16 wins, and then 6, 12, 18, 24 losses. You know what I mean? So it's not really that bad. You know what I mean? You can make money that way. So definitely something to consider. Now, when it comes to these 1 to 2s, what you need to stop doing is this. When you see an opportunity for a 1 to 2, right? Or I'm sorry, when you see an opportunity rather for like a, I don't know, 1 to 20 or something like that. but you keep getting tapped out of the market. What you need to do is you need to turn those 1 to 10s into 1 to 2s to be more consistent. Now, I know it doesn't look cool, right? But if you're going to take this trade, stop, and you have a feeling it's going to come down, at least down to here, stop being, stop looking for trades like this. Stop doing this. Stop doing this. Instead, think about the 1 to 2 rule I was just telling you, right? Reduce it. Bring this way higher, and bring this much more realistic because you'll hit it a lot sooner. And now your trade looks like this: 1 to 2. Much easier to take profit on this. Much easier, because you want to know why? You're allowing the market to fluctuate more against you, but you're also asking the market for less cooperation because you only need it to go right here and you're good to go. Compared to this, compared to asking the market for all this. This is when it gets more challenging, okay? This is what you don't need to do. This is how it gets more challenging, because now look at what you're doing. You're asking the market for much more cooperation, much more control. You're asking it to not only turn right here, but you're also asking it to melt and continue to melt and continue to melt and continue to melt, all in one direction just for you, because you think that that's how it works. And you guys know damn well, if you happen to get lucky enough that and I say lucky and I mean lucky, if you happen to get lucky enough that it does turn here, do you really think that it's just going to melt? How many times have you held the trade and it gets to about here and it just starts to creep up and it takes you out, and then maybe it continues or maybe it goes down? The bottom line is the probability of this scenario happening is not as strong as the other scenario, because it's all about how much you're asking from the market, how much cooperation you want from the market. Okay? Let the market do what it does. Okay? Let it manipulate, let it frustrate. Let it create fear, let it create greed. Okay? Let it do things by allowing it to do what it does, by giving it more room to move and giving it less room to have to worry about filling. In other words, allow it to do what it does. More room to the top to go against you, and then ask for less when it goes with you. That's being mature in the market. That's understanding that the algorithm right now is vicious. It's taking everybody out, every concept out, left and right. So the best thing you can do is ask for a lot less. One way to do that is by reducing your exposure. But again, if you're still working on getting consistent, you're still refining your strategy, the best thing to do, guys, is just ask for less from the market. Stop asking for this. Start asking for this. Because even this little thing right here, this little 1 to 2, like I just showed you guys, this allows you silly little trades like this. They seem silly, right? This silly little setup like this, not only is it much easier to find and much easier for you to take profit, but you can still have a win rate of only 40%. You could lose 6 of these in a row, win 4 of them, and still make money at the end of the day. And that's what it's all about, guys. It's all about making money. All about making money. At this point, you guys realize, I think at least the people that watch our channel, it's not about Lamborghinis. It's not about Rolex watches. Right now, it's about just being able to make some money so you can start to quit your job. You could start to, look into higher funded accounts. You could start to trade your own money with confidence, And the problem is, you need to accept this. And even if you want to do 1 to 2, 1 to 3s, even if the trade looks like an easy what I'm telling you, if it looks like an easy 1 to 20, right, or something like this, because you're saying, well, price is going to come down into this zone, it's going to come down into here, you're going to sell, whatever. Forget about that, guys. Figure out a way to make it a 1 to 2. Go like this. Give yourself a bigger stop so you can have a room for error, and then reduce your take profit and ask for less from the market. Take less from the market, and it will work out for you, man. I'm telling you. Now remember, guys, it doesn't matter what you trade. You can trade 61.8 like this. You could trade trend lines like this. You could trade order blocks like this. It's the fact that you're giving yourself a much better chance for things to actually work out, because you know how the market is. I mean, for those of you guys who are trading, what are we looking at? EU right now? If we just look at EU, I could remember this play like it was yesterday. There was a simple BOS right here, change of character, my new favorite term for the season, which unbelievable, right? But you have your 4-hour zone right here, and look at it. Look what I'm talking about. You see price come in, Price rejects right at the zone like it's supposed to, comes out, and then what's it do? It takes you out. Takes you out. But if you were looking for less from this trade, all right, if you were looking for something more simplified, something like, so instead of looking for something like this, because obviously, again, you would have been taken out, right? Covering this zone, you would have been taken out. It doesn't work, but if you would have just simply increased your stop, and looked for a 1 to 2, although you may not have hit your take profit, you would have still been able to at least survive the move till this point. You know what I mean? So you still, in other words, you still have hope, because they didn't take you out like they took everybody else out. Your stop is still up here. It's not the greatest example, guys. It's just a quick one, but you see what I'm getting at. Stop being a victim of these same silly stop ones. I mean, you don't need to. And stop trying to make 1 to 50s. You don't need to do that to make money. If your strategy, if you backtest and you only win 40% of the time, you could still make money on 1 to 2s. So just some food for thought, guys. I know a lot of people are probably aware of this already, but somebody had wrote us about our boot camp coming up, and they were talking about R to R and how to take advantage of it. And I think that it's really important to learn how to lose properly. And risk to reward ratio allows you to lose very often until you can work on that win rate and get that up. Because guys, this should never be your goal. First of all, you should never be happy to settle for this. But in the meantime, as you're trying to sharpen your tool, this is a good way to trade. By only looking for 1 to 2s. Again, even if the trade looks like an easy 1 to 10, forget about that. Increase your stop loss, decrease your take profit, and turn it into a 1 to 2, and you'll see your win rate go through the roof. Now, once that win rate goes to 40, 50, 60, now once you're in the green and maybe your win rate is 60%, well, then think about it that way. Now, every 6 trades you take, you'll win a lot more money because you're going to win 6 in a row and only take the loss of 4. So this bottom line right here is going to go up. 6 in a row gives you 12%, right? That's a $12,000 week. All right, compared to only taking 4 losses, which is what? 4,000. So in these days, you'll be making the $8,000 profit, only it's going to be down here for you. So then you'll be making your 8, 16, 24, 32,000 a month as that win rate increases. But the good thing is you're not at 60% yet. You will be. It takes time as you refine your own strategy. But again, stick to it this way, guys, if you're still struggling to kind of hone in. And another thing that you definitely shouldn't do, when you are in this situation, right, and you do your 4 trades in a row and they go well, right, and then you lose 6 in a row, do not change your strategy. Don't go changing it because you lost 6 in a row. Understand that that's actually your fault for having FOMO. You should have realized that after 3 losses in a row, those conditions were not meant for your strategy, because every strategy works sometimes, but that was not your turn to win. So after a couple losses in a row, just cut it short and wait for the next week and try again. Okay? But don't trade smart money and win 4 in a row and then quit trading it because you lost 6. Instead, refine those 6 losses. Find out how you could have won them. Don't trade trend lines, win 4 trend line trades in a row, and then all of a sudden, because you lose 6 in a row, jump ship and go start trading Fibonacci. Don't trade Elliott Wave for 4 wins in a row, and then you take 6 losses, so you leave Elliott Wave alone and you go trade smart money and buy a new course. Don't do that. Focus on what you're doing. Learn how to make it work for you. Learn how to make Elliott Wave, those 4 wins, find out what you did wrong, then find out what you did right. You know what I mean? Or vice versa. Find out what you did right on those 4 wins. Find out what you did wrong on those 6 losses and continue to improve on that, rather than jumping from strategy to strategy, course seller to signal provider to Rolex to leverage. Trust me, guys, run your own race. Learn how to make strategies work for you. That's the key to trading. Hope you got some value. We'll talk to you soon.